Hi and Assalamualaikum. I'm Shamila from Group 3 for Auditing course. Let me introduce my group member first, Nur Alfisha, Tasha, Pravina, Kuhan and myself, Nur Shamila. We make this video presentation to discuss about audit planning and audit risk in case study 3. For the introduction, the audit risk is the possibility that financial statements do not accurately reflect the organization current financial situation or that deliberate efforts are made to obfuscate the true event, and audit opinion certifies that there are no serious misstatements in the financial statement. The audit risk can be detected in 4 categories, which is inherent risk, control risk, acceptable risk, and detection risk. The shareholder, creditor, and prospective investor may be impacted by this risk. The objective of the auditor is to become aware of and properly assess the risk of a significant misstatement by offering a foundation for developing and enforcing remedies to such risks. Second, to maintain the value of the audit process, it is crucial to make use of the conventional audit risk model. The audit risk to be addressed when planning the financial audit of Misty Motors for the year end 30 June 2017. In planning the financial audit, we have found some audit risks in Misty Motors based on the case study, which is poor inventory recording, poor invoicing system, CEO resigned last financial year, and first year of audit. So I forward this presentation to my fellow friends to explain more details about this issue.
Okay, the audit risk to be addressed when planning the financial audit of Misty Motors for the year ended 30 June 2017 is poor inventory recording. Okay, the evidence is, as highlighted there, an extensive range of spare parts is held for which perpetual inventory records are kept, but no continuous checking is conducted by the storekeeper. Okay. Perpetual inventory systems are continuous. They are more flexible and complex than periodic system, but they also involve more work in the form of documentation and counting methods. Okay, so the storekeeper doesn't manage inventory using a perpetual inventory method, which calls for keeping inventory at the cost of each item when it is purchased. As a result, inventory may be overvalued because it may not be recorded at the low cost or net realizable value. The next audit risk is poor invoicing system. Okay, the evidence is, meanwhile, car servicing and body repairs are carried out in workshop by employed and some subcontracted service engineers, where most jobs are started and finished in a day, but the invoice are immediately prepared upon completion. Okay, according to the information, sales are declining. This can be the result of incorrect invoicing for work done by engineers and staff. Okay, then there is a chance that employees are taking advantage for the company's revenue by performing services for cash rather than issuing invoice.
The audit risk to be addressed when planning the financial audit of Misty Motors for the year ended 30 June 2017 is CEO resigned last financial year. As evident, in the financial year end, they had also faced a change in the management with the resignation of the company CEO, Mr. Tamastu Hosni. In the financial year end, when Misty Motors have to face a change in the management with the resignation of the company CEO, where the CEO is not present, this may cause or raise the risk of internal fraud. As a result of the financial statements, improper preparation, and the lack of prior audit information, significant audit risk factors. First year of audit. As evidence, the company reported a negative cash flow for the year with sales going down in one of its sites due to the fierce competition in the automobile industry and with the slow economic development in the country. Misty Motorshed expanded its operations by opening new sites in a few strategic locations across the country. In mid-January 2017, the management of Misty Motor had appointed an experienced chartered certified accountant to set up an internal audit department to examine and analyze company records and financial documents. However, the financial statements are not properly prepared and there is no information about these financial statements being audited before results in negative cash flow for the year with sales going down.
The information needed in order to perform analytical procedure during the planning audit is opening and closing inventories for the past 2 years. This will assist the owners in determining inventory turnovers ratios for the current and past years and gauging inventory levels. Inventory will be considered as a high risk item if there are any changes that come from the industry average. Second is the stock count schedule for the last 2 years. This is to determine how frequently the stock records are updated.
So, for the second part of the information that will be required in order to perform analytical procedures during the planning of the audit is stock count schedule for last 2 years. It is necessary to decide how frequently the stock records are updated. If there are large gaps between each time stock is added or sold out, the Internet inventory system is not being properly applied. Next is salary schedule for workers. It is possible that employed and subcontracted engineers will be paid a base salary plus a commission based on the number of repairs. Any significant changes in compensation expenditure that show on the income statement will most likely be detected by comparing the preceding year's salary schedule to the current year.
Internal audit report on previous year's financial statement. The needs for today's auditing include evaluating internal controls. Also, it helps in identifying risk factors. The standard may lack clarity. The design of the financial reporting controls are relevant to the audit must be evaluated by auditors annually to ascertain if they have been appropriately implemented. More research is necessary than simply asking business employees about this. To comprehend the controls that are pertinent to the audit, auditor must employ extra methods like observation, examination, or tracking transactions across the information system. The auditor's professional judgment will determine the proper procedure. Okay, that's all from us. Thank you.